Hey, Alpha fan, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to do an update on the viewer request of Litecoin. And as you can see, we do have a continuation of overall bearishness in the market. This was probably to be expected just because of the macro circumstances that we have, which are just overwhelmingly bearish. However, you might have expected that there could have been some key volatility right at the end of the year where maybe the holdouts ended up selling, off their remaining crypto for perhaps tax purposes or repurchased on, January 1st, and so there could have been a bounce. But guys, I think we just have to wait to see what's going to happen. Of course, this market has been tremendously boring, so let's go ahead and take a look at, Litecoin over here. And last time we were talking about that there would be a possible pullback, and then it was still looking fairly bullish. And if we look at the chart, that's pretty much what happened. So we did have this kind of a peak that we were on, started to have a little bit of a red candle in the last Litecoin episode, and sure enough, we had that pullback. Now, what were the key levels that I did establish for us to keep an eye on? Let's go ahead and go to the 6 hour, because I do believe I was using the 6 hour in the last episode. And then let's put on the previous measurements there. And we can see that we did hold the critical area that I was pointing out. So we were on our way down from up here, just kind of having a little bit of a curve. Could have been much more bullish, but we ended up doing just a full retrace back to this kind of liquidity area. I did want to see us to hold this area to prevent a failure, and then that could have been front runnable to the upside depending on how deep this thing went. And I really did not want to see us falling underneath this line here at a 64.99, essentially $65, because that would have started to break things. But as it happens, we pretty much perfectly tagged my line. Look at how beautifully we sat on this pivot level that I had outlined here at 66.24. I didn't change any of these numbers. Look at that. We did a perfect double bottom off of that. Just got kind of nice wicks down to my really critical area where things could start breaking. And then look at this. Ideally hold this area to prevent a failure. Look, we came up. Look, we wicked to it once, twice. The third time we broke through, and then we retested it as support, validating that ideal holding spot to prevent a failure. And so what would that suggest, Alpha Fam? Well, we were also above my hell line here. And so while we had just broken down in the last episode underneath it previously, we did get back on top of it. And then we actually had, not only did we have these type of validations, but we also had a confirmation of our hypothesis there. And so we did get this nice bullish run, which was approximately 8 to 9%, depending on where you could have caught that at. I think this double bottom with the candle closes on the daily, plus the a little bit of a higher low on a wick basis, probably would have been a great indication on these whole lines, especially on the 6 hour and above. But guys, I hope that you enjoyed your holidays. I hope that you're having a happy new year. And so there is money to be made in this market. The Alpha Fam is absolutely killing it. This was just an excellent move to have been able to grab if you just had some patience and just let it come down to whatever level it put in some type of a confirmation. And again, like we can have a hypothesis or whatnot. We can have some, just kind of a concept, right? But what we really want to see is some type of validation and a confirmation in order to be a conservative trader. And then you can capture, you can be kind of a risky trader if you'd like off of that double bottom. If you have other indicators that you're using, like perhaps the MACD or the RSI, and they're giving you a good clue. And or you can wait for that, that extra bit of confirmation there that, yeah, we're on an uptrend, right? We have a higher low, and now we have these higher local highs just on the very short time frames. Let's go ahead and just remove this because, as you can see, we had to reacquire this level for bullishness, 70.80. And what do you see is happening right now, AlphaFam? Right now, you can see we're getting a bit of a double top. Look at this. Look at these two wicks right here. That's very bearish to have two wicks basically ending at the exact same point. I wouldn't call that a double top itself, but I would say it's just a lot of pressure down. We are seeming to be being rejected, 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 rejected at my must reacquire this level for bullishness level. And where does that line up with? It lines up with this previous rejection area. So what does this look like taken together? A double top, right? This is a double top where if we continue to break down, you can see we're already losing my whole line. And if we continue to break this line, then we are likely to retest the lows or retest some of these areas that we've developed down here. And you can see this wick has already done it, but we might continue our way down. Let's go ahead and just jump to the 1 hour to see what our structure looks like. You can see that we have an engulfing candle on the 1 hour. So, the chart is trying to basically fight this. There is a bullishness in this chart, and you can see, if you just imagine it, there's a diagonal here that really isn't that critically broken, but if I draw it, you will see something quite interesting, which is that we are in danger of just doing a bearish retest on the breakdown of that line. So if this thing ends up wicking back down, especially if it gets under this other critical level, this momentum level, this blue line that I had here marked out, then we could end up losing our momentum to the downside once again, which is, pretty normal after a 10% almost run up, right? I mean, people want to take some profit. So, this is perhaps a moment where it's just going to touch back. Maybe it finds its way back into some of these middle areas. And if we take a fib of this, um, we could just suggest some obvious places. Obviously, the 236 would be a very bullish bounce, but it could come down to the 382 around this 69 bucks. It could come down to the 50 around this 68, $60, or it could come to the golden pocket right here in that ideally hold area, which I was talking about. Just kind of retest that, confirm it's bullish, and then continue on its way. So just from these shorter time frames, that's what I would present to you. Let's remove this. Let's get rid of those fibs. Let me get rid of this diagonal that I drew. And let's go ahead and throw on our new daily. So these are our new numbers, okay, guys? And for the daily, in fact, let me go ahead and type that out. For the daily, these are going to be the numbers that you really want to pay attention to in the next day or two. So we obviously have a little bit of an uptrend here. This on a wick basis is a lower high. On a candle close basis is the higher high. So there's a little bit of indecision going on right here, which you can just see plainly. And that is reflected in the momentum. So again, I calculate these momentum pools and I calculate these momentum scales based upon four different types of momentum measured over 5 time periods, and then I'm just isolating the daily for this presentation right here. And what you'll see is that in order to continue bullishly, we are going to need to hold 70.80. And I should say this in a different way. We're just going to hold that level, okay? It's not going to be adding any additional momentum. If we get back up to 70, 80, it doesn't mean we have a lot of momentum to the upside. It just means that we hold whatever momentum got to this point and it started to slow down a bit. Now you can see that, we are just, below that level. So we're kind of losing our momentum, if you understand my system here. And you can see that we're just swimming around in the alpha momentum pool. Now, what does it mean to be swimming around in the alpha momentum pool? It just means Nothing, to be honest. It just means we're just on the lookout. It means I don't consider this a tradable area. Okay, it could go up, it could go down. It's just going to swim around in the momentum pool. That's all. This is the area that it has to play with. Now, where does it lose key momentum? Well, it's actually going to be also at, a couple different momentums are going to lose their level here, right here at $68. So if we do lose $68, two different metrics of momentum are telling us that we're probably going to head further to the downside. And so $68 is really that critical level that we want to hold, just to preserve this pool of momentum that could possibly take us to the upside. Okay, and if we want to just keep our bullish orientation, then we need to re-achieve 70.80. Now, why is this possible? Well, if you think about it, we could just have some horizontal price action here. It's not really going to do anything. It's just going to be basically sideways consolidation, right? If we have anything above this wick low right here, it's actually going to be a higher low. And so the majority of this alpha momentum pool is going to actually be a bullish orientation. Now, if we get around $69, 68.88, then we're going to be losing this wick, and maybe there's kind of like a front runnable thing down to the bottom of the pool. But again, like, it's just not super tradable in my mind unless we're below 68. Then we're going to have increased momentum to the downside, or 70.80, in which case we're going to have preserved all of our momentum to the upside, which is good. You want to preserve that momentum because it's been carrying us pretty well. Now, what is this level that I have down here? Well, this is a daily volatility pivot. So what does that mean? That if the volatility shifts in the market, and if we're below this level, then there's a higher risk of being just shot down like a lightning bolt to the downside. Okay, as long as we're above this volatility pivot, then should we have some type of volatility expansion in the next couple days, I don't know, anything that goes on in the market that just shifts volatility, our bias is actually going to be to the upside. And how do we know that that's true? Because again, like, this is our low on those multiple day kind of measurements, and you'll see that this would be just a higher low, right? So in very practical terms, that's what we're talking about. If we do throw some EMAs on the chart, you can see that we are you know uh, we are below the let's see, I think I'm on the 1 hour here, so let's go to the daily. Yeah, there we go. Throw our EMAs on the daily there. There we go. Okay, so we are above the 4 EMA, which is pretty bullish. We are above the 9 EMA, which is pretty bullish. And so again, yeah, the EMAs are also telling us that kind of a $69 area, right? That 68.88 kind of area. That's where this thing starts having a little bit of a bias to the downside. And again, I can really do mathematically measurable momentum losses or increases, based upon these levels here, and then also a volatility pivot specifically down here, but just on kind of a loosey goosey kind of shooting from the hip kind of intuitive way of thinking. The EMAs, which are constantly dynamic and shifting and redrawing, again, that $69 area is still pretty important. So just pay attention to that also. Let's see, did that line up with anything on our fibs here? Yeah, it does. It lines up with the 382, so that is a bullish retracement. So hey, anything down to 69 is still very bullish. What I would be worried about is if we do get to the point 0.5, we're actually going to be underneath the 9, and that's going to be bearish on a closing basis. So, you know, on a daily basis, and again, this stuff changes day to day, but at least for the next day or two, you probably want to hold $69. Okay, so let's go ahead and get away from this daily chart. And let's go ahead and throw on the weekly, because the weekly may have a little different opinion for us. And absolutely, it does the weekly. You can see that again we're above the 9 and we're above the 4 here. Where does the 9 play out? About 68.34. So you can see that between the daily and the weekly, which by the way, it does have a full week till close. So you have plenty of time to achieve these numbers. In other words, the day could be lost, and as long as the day doesn't lose its critical areas, then you could always bounce back up and the weekly could be recovered, right? So we have to pay attention. The weekly has a week to go, and the day is just it could be valid for the next couple days because it doesn't tend to change that much unless it accelerates. But anyway, for the week, what we have to get above is 70.80. Okay, and you can't see that we're below that threshold, so we're not going to hold our current momentum. It does mean that we are starting to lose momentum, and so that means we're just going to be adrift in this momentum, this alpha momentum pool of mine over here, this kind of system that I developed, and we will have a sharp loss in a key momentum around 65.35. So the EMAs are saying, yes, that 69 area is, that's very important. You don't want to close below there on a weekly basis, but then also probably because of where our 21 is oriented, it says within that alpha momentum pool, you really, really, really don't want to lose 65.35. That'll probably be front runnable to the downside. And then if you lose 64.30, probably you're going to shoot down. How can I know that we're probably going to shoot down? Because we're also below the volatility pivot. And so if in the next week, there's any type of volatility shift on the weekly charts, then what's going to happen is not only are we just by default having a bearish bias, and that could be identified, if we zoom out here a little bit, that could be identified by the fact that we are putting in a bit of a higher, a lower high here. You see, if we do end up turning around, this is just going to be a lower high, and that's going to signal the possibility of a downtrend being formed. It won't be confirmed yet until we put in a lower low, but it will be signifying the possibility of a downtrend. And so, a lot of traders will be taking their profit if this does look like it's not going to be able to capture our current momentum. And so underneath 65.35, a lot of people are going to probably start front running. Underneath 64.30, it's going to be a critically dangerous area where any volatility pivot could just take us back to our lows. And so if you guys have been in a long from my last video on Lightroom, where I did show the critical areas that we had to hold for the pump up, then of course now might be the time to take some profits and just see if we can get over that level of 70.80 on the weekly. And it's also the same level on the daily, right? So let me go ahead and remove the weekly. Yeah, it's the same level on the daily as well. 70.80 is really what our momentum is telling us that we need to capture. And again, on the weekly, you can see that we are curving. We're starting to curve. And if we do one of these things, it could be a sharp pullback. It doesn't mean that it's bearish. It just means it could be a sharp pullback. We could get into some of these support zones before we come back up. So that does suggest, hey, why don't you take a little bit of profit as long as we're not over 70.80, this thing could flip around. Okay, so just be careful about that. And guys, I think that's going to do it for Litecoin. Um, let's see here. Let's just bring this out to the daily while we're looking at the weekly here. And just, yeah, so, again, like you have that double top on the daily, and it is just possible that it comes back again. This is for the weekly here. These levels are for the weekly. In fact, I should type that out. Weekly. So if you want to take a screenshot of those levels, that would serve you pretty well. And then for the daily, which is just going to apply for the next day or two, then these are the levels that you're looking at right there. Okay. So guys, that was your alpha for the day. Stay safe and happy trading.